We are coming to the end of January expiration, and having done that, there's been very little movement for this month. Now, was that what we would have ended up anticipated at the start of January? The answer is probably no. But given the last 2 weeks into expiration, when something is not moved, there's a clear intent of the markets to stay range bound. Typically for option buyers, it ends up becoming a pretty bad month because whichever side you may have tried to be on, all the options are going to expire worthless. Now, once that is done, once this expiry is behind us, we are heading right into an event, and that is the budget 2023. Now, budgets have a historical pattern, which means that markets can sometimes be very, very bullish ahead of budgets, which means you see a lot of expectations build up. And that's also backed by an existing rally. So, if markets have been rising for the last 7-8 months, the final move into the budget ends up being bullish. And then many times, maybe 80-90% of the time, you end up seeing the market peak out on close to the budget day. Either on that day, a few days later, if there's a continuation because of some positive announcements, sort of the excessive bullish enthusiasm starts to cool off. But on the reverse, if you've actually not seen an up move, or rather the market's been in a downtrend, then it's also possible that you actually see the opposite, which is a few times we've actually seen market lows at the budget time. But whenever there's been a consolidation ahead of the budget, it's basically the market taking a pause, saying like, well, we don't know what's coming at us. We've already rallied a bit. Let's just wait for the announcement. And typically when the announcements come, and if there's nothing negative, the markets tend to take it positively and rally. We've seen a couple of those rallies. I remember way back 2006. I remember 1997. So many other occasions where this has happened. 2005, a very, very mild post-budget move, and then it sold off. But some of them have been stronger. And in fact, 1998, I think, post just around when the Kargil battle broke out, just before that, 99, early 99, we actually saw a post-budget rally and then a cooling off because of the battle at the border. So many of these different occasions, and I've gone so way back, we can even come closer in time to see some of the action. 2021, more than a year ago, 2 years ago, in fact, we actually saw the market dip in the days ahead of the budget, 6-7 days of selling, and then it turned around just a day before the budget and then rallied into the post-budget environment. So we have to closely monitor what is happening, and what we've seen through January is more like, instead of a bubbly rally and expectations, we're actually seeing a market which has been pressured down because different stocks are doing poorly, given the earnings season is sort of flat, not one of the best earnings seasons so far, and therefore stocks are still correcting, and that's keeping pressure on the index even as a global rally breaks out. So this depressed environment ahead of budget 2023 tells me that most of the negatives will end up getting priced in, unless there's a major global problem around budget day, and if something is breaking out. My sense is that if you're depressed ahead of the event, then most probably you're going to rally after the event. So let's see how it goes. We have a couple of days left, and my sense is that things could actually pick up. So at the start of the month, what I would have actually thought is you end up getting a budget rally which heads right into the first day of February, and then you sort of peter around there, rally maybe a little more, or peak out at that time. That was the expectation at the start of the month. But now, just one day about the monthly expiration, I think the tables have turned. We're actually seeing a depressed market for January, and that actually improves my expectations for what might actually happen next month. Now, this is also backed by that global conditions are improving. So actually, you should have seen a rally in Indian market. So whatever the reason be, like I said, it could be the earnings weakness or what's really kept pressure on our market. Globally, we've seen improvement starting with Asia in the last week of December, spreading to Europe into early part of January, and then eventually US markets taking off. Now, all of that has already happened. India should have joined in at some point of time, and more time that we remain under pressure, not picking up, I think eventually you're going to actually see the Indian market pick up and join the rest of the world. The only question is when. So I'm saying probably after expiration, because the pressure has been on for this month, and mostly after the budget announcements for sure. So even if the momentum prior to the budget is slow, we might see it pick up after the union budget of 2023. This budget is also going to be the last full budget that they're really going to have before the elections of 2024, which is also reason why people's expectations should have been far more positive than they are. So I'm really surprised that, expectations have come down, but then, expectations are a function of the market. If the market was going up, expectations would be high. If the market is down, expectations become low. There have also been some amount of rumors around, potential, tax changes that are negative, like, they might raise capital gains tax on investors or something like that, that they need to fill in their books. But I think some of these expectations could be misplaced simply because the governments actually had a good time as far as tax collections are concerned. GST collections have been improving year after year. Because of inflation also, tax revenues usually go up because inflation is price. So if prices of goods and services have moved up, your GST collections and profit tax that you actually get from corporations all improves. So in general, inflation is good for tax revenues for the government. So tax collections have been good. So if there is no tax pressure, why is the rumor floating around about tax hikes? So that might be sort of misplaced pessimism. My sense is the government actually will have some room to continue to spend, just like last year. They continued to expand on capex spending, and that was one of the things I was expecting ahead of the budget in my interviews. It somehow didn't get discussed at that point of time. I think the negative effect of Russia was pretty high on markets in general, and people stopped talking about that. Government's actually spending more, or some people said, yeah, they're spending more, but it's not a lot. But eventually, when the capital goods sector started to outperform in the second half of the year, everybody is saying, oh, government spending on capital goods was good. So they ended up accepting that. So incrementally, if the government is still spending more compared to the previous year, it helps. That is one part. And on the other side, if they do end up announcing measures on probably related to maybe savers in general, which is the middle class and so on, the salaried class, a large part of the population, you could actually improve their income side, to some extent, which actually helps in an environment where rising interest costs have actually been bearing down upon expenses and the repayments that they have to make. So you could actually help the situation, easing the pressure on spending and consumption. That could go a long way in a year which has started where inflation is actually coming down globally, including in India. And if that trend continues, then the pressure, at least near term, on interest rates would go away. So that is probably the positive side of the whole thing. So if you ease the pressure on inflation and you actually get some relief on taxes on the saving side, then that could actually boost the consumption side as well, apart from government spending on the capital goods side. And so generally speaking, this budget could actually end up being more positive than people are thinking. So there's always both sides. I could have, looked at the negative side as well, but I think even if the market rallied into the budget, I would think, well, it's going to be a good budget, but maybe discounted. I don't think there's reason to believe that that budget 2023 should be bad, given the general state of the economy and where the government really is on it. So India has been less hit by what's happened around the world. Surely, rising rates was a trouble point. If rates went beyond, bond yields went beyond 7.5%, I would have been the first one screaming, and I've already spoken about that. But the fact is, it's not happening right now, and globally the pressure on the dollar and yields is coming off. And so those are reasons to believe that we have something in the short to medium term to really get a little excited about, and the budget can actually help in spurring that into a good sustainable rally post the budget, maybe all the way into March of 2023. So that's the setup that I'm looking at, and we should see it play out in the weeks ahead.